Hi everyone. Let's analyze Hindalco Industries using this one-page report generated from cashtex1.com. Anyone can get these reports instantly for any stock on WhatsApp or email, with no login required. Hindalco is the metals flagship company of the Aditya Birla Group, and one of the world's largest aluminium and copper manufacturers. The company makes everything from raw metal to high-value rolled products used in packaging, transport, and construction. Starting with the essential values. Current price is 797 rupees. The PE ratio is 10. The industry PE is 24. This means the company is trading at only 42% of the industry average, which indicates significant undervaluation. The 52-week range is 546 to 864, and the stock is currently near the higher end. This shows strong momentum over the past year. The 3-year range also shows that the stock is near its long-term highs. Beta is 1.55. This simply means the stock moves more than the market, so price fluctuations are slightly higher. Market cap is 1,79,000 crore, making it a large, stable company. From the high levels of traded value, we can observe that it is amongst the top 20 companies in terms of traded value per day. Now scrolling to the valuation section. According to the Graham model, the intrinsic value of Hindalco is 980 rupees. What is intrinsic value? It represents the estimated true worth of the stock based on earnings and growth. Since the current price is 797, and the intrinsic value is 980, the stock appears mildly undervalued. The price to intrinsic value ratio is 81%. This means it is trading below its fair value. Next, the PEG ratio, which compares price to earnings growth, is 166%. PEG ratio above 100% usually means the stock is priced slightly high relative to its profit growth. Now moving to the 3-year growth data, or CAGR. CAGR stands for Compounded Annual Growth Rate. It shows how much the company has grown on average every year. As per 3-year CAGR figures, the sales have grown at 7% annually and net profit has grown at 6% annually. The 5-year CAGR figures are even better. These numbers show stable, moderate growth. The debt indicator is red as the debt is slightly high at 202% of its annual operating profit. Promoter's share is less than 50%, but that is not really a big problem as the promoter has not reduced his share in the last 3 years. Now scrolling to the annual performance graph. This graph shows the long-term journey of the company. The orange sales bars are rising steadily from about 1 lakh crore to over 2.3 lakh crore. These values can be seen in this table below. This indicates consistent long-term business expansion. The red percentage values indicate the growth in comparison to previous year. The green net profit line also shows an upward trend. There were small dips earlier, but in the recent years, profits have recovered strongly. The blue operating profit line remains stable to rising, showing healthy operational performance. The annual graph is smooth and steady, not erratic, which means the company has maintained stability over many years. This is especially important in the metals and commodities sector, where price fluctuations are common. Even the operating profit margin is consistent across the years. Overall, we can see stable growth, improving profits, and consistent operations. Now let's focus on the quarterly performance graph. This section is very important because it shows how the business has performed in recent quarters. The color coding remains the same as annual performance chart as explained just now. Even in the quarterly performance, we can see a consistent upward trend in sales and profit growth. So we can conclude that the long-term and short-term performance has shown a consistent growth in upward direction. Just for some additional information, this graph underneath is also showing the growth figures when compared to the same quarter in previous year, as the quarterly figures are usually compared with previous year's quarter. Now scrolling to the risk indicators at the bottom of the report. Over here you can see the CAGR figures across multiple parameters for last 3 years. Below this over here we can see that borrowings to net profit ratio is around 400% and borrowings to operating profit ratio is around 201%. This means the company carries significant debt, which could be because of the recent acquisitions of 2 companies called Novalis and Aluchem. These acquisitions were done by them to create an integrated value chain. Slightly high debt is common for metal companies, but it is also important to monitor it. In this case, we can see that the borrowings have been decreasing slightly in the last 3 years, which is a healthy indicator. Reserves have grown at 16% and investments at nearly 20%, which are very positive signs. Now scrolling to the shareholding pattern. Promoters hold 34%. FII, or foreign institutional investors, increased their share to 27%. An increase in FII holding usually indicates higher confidence from global investors. DII holding and public holdings remain stable. There are some more quarter-on-quarter growth figures in this table that you can pause and read. Over here in the report you can click the blue boxes in the to see the latest news about the stock as well. Now to summarize the overall discussion. Hindalco seems to be fundamentally undervalued. Quarterly performance is improving. Annual performance shows strong long-term growth. Margins are stable. Global uncertainty and tariff wars might create some fluctuations. Debt is the primary risk. But overall, the business looks strong in both the short term and long term. Just as a disclaimer, this video is only for educational purposes to educate the investors about the financial parameters and is not intended to be and should not be construed as financial advice, investment recommendations or a call to action to buy or sell any security. If you want this exact one-page report for Hindalco or for any other stock of your choice, go to cashtex1.com. You will receive the report instantly on WhatsApp or email with no login required. Comment below which stock I should analyze next. See you in the next video. Thank you.